Hello traders, and welcome to my fourth candlestick trading video. So again, today we're going to be looking at some candlestick formations and deciding which way we think price will go based on those formations. So today's going to be a little bit different because we're going to be incorporating some Fibonacci retracements into our candlestick analysis. It helps out a lot in deciding spots to buy and spots to sell, so that'll be really helpful. And we're also going to be using a lot of support and resistance. So if you haven't seen my video on support and resistance, and especially if you haven't seen my video on Fibonacci retracements, I've made 2 of them so far, I would highly recommend that you check out those videos. Okay, so today we have a lot of 3 candlestick patterns, so I would recommend that you guys get familiar with the morning Doji star and the evening Doji star, because these 2 formations will come up a lot today. Alright, let's get started. So in this pattern we had a high formed with a pretty bearish candlestick here, bit of a bear run here, bull run up to the resistance level, and then we had a bear run here and then a bull trap, meaning that this looked like price was going to go up because it was at support, but actually price just went down. And now we have this formation here. So I'm going to ask you guys, do you think this is a spot where you would buy, or do you think this is just another bull trap where you're going to get trapped into position and then price will go further down? I'll give you guys 10 seconds. Okay, so this is actually the morning star formation, actually the morning Doji star formation as it's called over here, as you can see right here. Usually I like it better though with the morning star doji, with the morning doji star, when the bearish candle, this first candle, is smaller than the bullish candle that comes out of the doji, this one. And here we can see it is. This candle engulfs the entire consolidation pattern here, and we can infer that price will very likely go upward. So if you had used a spot to buy, then you could have turned out a decent profit. So if you had another spot to buy here, would you buy? Now this formation may not look too bullish, but I'm going to show you guys something that might change your opinion on that. I'm going to draw a Fibonacci retracement from here, where this mini bull run began, up to here. And I'll give you guys 5 seconds to guess what this formation is, and also why you should buy or why you should not buy at this price. Okay, so if you guys had said this looks like another morning Doji star formation, you'd be right. Again, I did say before that I prefer when the bullish candle moves higher than the bearish candle before it. But in this formation, it closes at the 50% Fibonacci retracement. As you can see, it closes halfway down, and the tail, the lowest part of this formation, actually was at the 61.8 retracement. This is very bullish. When you get a tail at the 61.8 and a close at the 50%, the high majority of the time price is going to go up from here, especially with these strong bullish candles. And as you can see, price did go up, which brings us to our next pattern. So if you were in this spot and you had this position open where you probably invested about half of your money here and then the other half here, that would have been a very safe way to do it. And then you got to this formation here, what would you do? Again, I'm going to give you guys 5 seconds. Okay, so this is the evening Doji star formation. I'm going to show you guys it over here. Evening Doji star. And we actually have a bearish candle that is stronger than the bullish candle before it. As you can see, this candle is longer than this candle. And this formation is quite bearish, and we went downward. Also, it's important to note that this is at a support level, as you can see. At a resistance level, because this has resistance from here, a lot of resistance here, a little bit here with a tail, and then this resistance was acted upon and price went down further. So this would be a good spot to probably close out at least half of your position or even the full position when you see something this bearish. Okay, so this moved downward, and now we have this formation here. And if you guys are getting the theme of this video so far, I think you can probably guess what Fibonacci retracement this is at and also what formation this is at. I'm going to give you guys 5 seconds to guess the candlestick formation, the direction, and what Fibonacci retracement do you think this is at. Okay, so first of all, this is another morning Doji star formation, as I've pointed out countless times. It's right here. And this time we have a stronger bullish candle than bearish candle, as you can see here too as well. The Fibonacci retracement is actually at the 61.8, as you can see right here. This 61.8 retracement is the 208.32, and this looks perfectly like it touches it and rebounds immediately. This is a very bullish sign, and if you had seen this candle print with this rejection of the 61.8, you'd very likely want to buy this formation. So if you bought here, because of all these signs, it being a very powerful 3 candlestick formation, and also it touching the 61.8, then you would have made a very nice profit. From about, you would have bought at about 220. That's the high of this candle. And you probably would have sold around the 230 to 35 if you wanted to. Again, I did just kind of give this away, but what candlestick formation do you think this is? And I think you guys could probably guess the direction at this point. Okay, so if you guys had said again that this is a very similar formation to this one, except just that this candle was not as bearish as this candle before it, you'd be right. This is the evening Doji star formation, as I've showed you many times. And this is also at a resistance level, as you can see here. Resistance, resistance, and resistance. And the more touches you get on a resistance level, the stronger it becomes. That's a very important point on judging the strength of a support level or a resistance level. But you want those touches, quote unquote, to be spread out. So if you have a lot of touches like at one point, that doesn't really mean that much. For example, if you have a point like just a random resistance point like here, where you have a lot of touches, these aren't that far in between. But then like this formation, and then this formation, and then this formation again, this creates a very strong resistance line when you have these far away resistance still acting on itself. So if you had closed out your entire position here, that would have been a very smart move, as price moved much lower, as you guys probably know. So that's going to be it for some candlestick practice and incorporating some Fibonacci sequencing into it, and also incorporating some support and resistance levels. So I think that that's going to be it for this video, and see you guys in part 5. Thanks for watching.